China has been on a massive gold buying spree lately, with a record streak of 18 months of continuous purchases as of May 2024. They have overtaken India as the largest buyer of the precious metal. But what's driving this sudden gold rush? Is it part of the de dollarization strategy to steer away from the US? Or is it preparation for an economic uncertainty amid rising global geopolitical tensions? Or is it something entirely different? So, in this episode, we will deep dive into all those possible reasons and we will get into the detail. So, let's explore. Hello everyone, I am your host Siddhant and welcome to the Junior Talk, the show where we discuss the latest in finance, economy, business, technology, and many more. So, let's get into today's episode. So, before getting any further, first let's look at some numbers. Between 2021 and 2023, the People's Bank of China, which is the central bank, bought roughly 275 tons of gold, according to reports from Goldman Sachs and World Gold Council. China's gold reserve have now reached a staggering 168 billion US dollar with a record 2267 tons in reserve, which represent 4% of China's overall reserve. Even from an investment perspective, the long gold position, that means the trader which are bullish on gold on Shanghai's future exchange, has climbed to 295,000 plus contracts, which is equivalent to 295 tons of gold, marking a 50% year over year increase, as noted by Financial Times in May 2024. China's gold exchange traded funds saw an $253 million inflow in last month, which marked a 6 month consecutive inflow and taking the asset under management to a new high of 87 tons in gold. But why the world's second largest economy is suddenly so keen and interested in buying gold? The first possible reason that comes to mind is to break the dollar hegemony. The US China rivalry has intensified in recent years, especially post pandemic. Since 2021, China has cut its US Treasury bond by 30%, down to $767 billion, over $1 trillion before 2020. In the first quarter of 2024 alone, China has sold nearly $54 billion in US Treasury bond, signaling a shift away from global reserve currency and hedging with gold. Supporting this further, data shows that from 2010 to 2023, share of Chinese cross-border transaction in US dollar has dropped from 84% to 42%, while transaction in Chinese yuan has increased from 0.3% to 52%. In March last year, for the first time in history, Chinese yuan overtook US dollar. However, success has been limited. Over the past 11 years, global transition in yuan have only increased from 2.2% to 7%, while the dollar remains dominant at 85% plus in the same period. Several factors contribute to this. The devaluation of yuan against a dollar, losing about 16% of its value since 2016, has led to capital outflow, as noted by the economist. Additionally, the US offered transparency and government accountability that China lacks, which makes dollar a stronger reserve currency. The Chinese Communist Party's control and its unique monetary policy response has created a significant trust deficit among investors and other stakeholders, hindering the adoption of the yuan. The second possible reason is the recent geopolitical tensions. The Russia Ukraine conflict in 2022, the Israel Palestine face off in October last year, and heightened tensions with the US over Taiwan have put all China on alert. Supporting Russia during the Ukraine conflict has led to Western sanctions on Chinese goods, including EV and battery components, which are significant export areas for China recently. And coming to the third possible reason is China's collapsing domestic real estate industry. Post 2008 financial crisis, China's property market has been booming and it was mostly financed through the local government investment and debt. The biggest Chinese real estate developer Evergrande Group's share price beat the Hang Seng Index by 30% between 2009 and 2017. But since the initial days of COVID 19 in 2020, China has been grappling with a real estate crisis, starting with Evergrande collapsing with 300 billion in debt. Historically, real estate was a major investment vehicle for Chinese people, representing almost a quarter of the national GDP. But tightening regulation under Xi Jinping led to a liquidity crisis for many developers, including Evergrande, causing a devaluation in property prices. So, logically, with the real estate market in turmoil, which has been a great wealth creator for Chinese people for a very long time, Chinese investor and Chinese people are now shifting towards a safer asset class, that is gold, creating an unprecedented demand for the precious metal. The Chinese gold rush did slow down a little in June this year, but in summary, China is buying gold like never before, driven by multiple factors: a desire to break the dollar hegemony, geopolitical tensions, and a struggling domestic real estate market. Additionally, a slowing economy which was never seen before in the last 2 decades, an aging population, and Western sanctions are likely to contribute to this factor. So, whatever might be in store for China, only time will tell the full story. That's all for this episode, guys. I hope you guys would have liked it. If you did, then it would mean the world if you guys can like, share, and follow it on Spotify, Apple Podcast, or wherever you get it. Thank you so much for listening again. Take care. Until next time.